A big thank you for joining us tonight. My name is Dermot Campbell and I'm the Treasurer of the Big Tent Foundation. The Big Tent's objectives is to give a voice to the unheard and to stimulate debate, which will lead to progress and ultimately regeneration. Tonight, we're talking about the digital divide and virtual poverty. These events are free to attend as an audience member. However, as Susie said, please do join up as a friend of the Big Tent. We're currently in the process of scheduling a series of exclusive events for Friends, and Friends membership is an important element of our funding. Innovation in the monetary system has prevailed for thousands of years, with evidence of sophisticated monetary systems going back as far as 30,000 years ago, where evidence was found in Congo. The concept of money has existed since before written history and was initially thought to be a series of signed tokens made of clay, which subsequently turned into coins from valuable metals such as bronze or gold. Banknotes were introduced by the Chinese over 2,000 years ago, and it was the 17th century when there was a shortage of silver in Britain that the government started making coins out of less valuable metals, thus breaking the link between the value of the metal and the value of the coin. Today, physical money really is just a symbol of value rather than actually a valuable commodity. Recent innovation has included virtual currencies such as stable coins and the widespread expansion of the contactless payments and digital wallets. All of this has given rise to a sharp decline in the use of cash. Over 10 years ago, cash use is down 60%. And cash transactions in September were down a further 50% on that. In other words, in September this year, we used 25% of the amount of cash that we used in 2009. The government has stated its commitment to maintaining the cash system. However, momentum suggests to me that they may be fighting a challenging battle there. The problems of physical currency are not new, but have been brought into sharp focus by COVID-19. Frankly, cash is dirty and probably the principal conduit of colds and flu. For businesses, having had to hold large amounts of cash on your premises is very risky, and you have to pay somebody to count it and take it to the bank. That is always assuming you can actually find a bank. The demise of cash is a real problem for exclusion. Quite apart from the poverty premium, where people have to pay to access their money, there is also a problem with free markets. As a fintech entrepreneur, my primary focus was to maximize the value of my shareholders, and it wasn't to fix social problems. Market forces are a great thing for bringing about innovation. However, the issue with them is that they cater for the majority and can exclude minority groups. So what are the barriers? Fear is a valid one. For people who lack experience in the digital technology, exploitation is a real risk. Other problems include victims of domestic abuse who need to save secretly, people without legal immigration status who can't open a bank account, and the elderly who need to give cash to their carers to go and pick up supplies. So with all of that, tonight we're very fortunate to be joined by Guy Opperman MP, who is the Junior Minister for the Pensions and Financial Inclusion. Alongside Guy is a number of other esteemed contributors: Polly Mackenzie, Chief Executive of the think tank Demos, and formerly Nick Clegg's Director of Policy; Sian Williams, Director of Innovation and Policy at Toynbee Hall; and Martin Kopak, formerly of the Financial Conduct Authority, where he worked on a consumer vulnerability and a financial inclusions program, now Director of Fair by Design, which is a charity that campaigns to end the poverty premium. I will start this evening by asking each of the contributors to introduce themselves and to share their initial thoughts before going on to address the questions from the audience. We'll then have a brief summing up from each of the contributors and move to the informal part of the evening, where the recording will stop and will encourage you to, as an audience, to stay on for an informal discussion. There's no compulsion to do so, but you would all be most welcome. So let's start. Martin, from a consumer perspective, what does this problem look like to you, and what do you think the answers are?
Thanks very much, Dermot. As Dermot said, I represent Fair by Design, and we exist to eliminate the poverty premium that people pay, the extra costs poor people pay for essential services. That can include energy, banking, credit, insurance. So First of all, I just wanted to say how delighted I am to speak, and that's because we are now talking about the needs of people who just generally aren't prioritised, the 20% rather than the 80%. And I think what we're talking about here very much is around where the whole adage just doesn't work, where empowered consumers drive the market. Actually, in many cases, they don't. Put simply, and what Fair by Design is about, is around designing it inclusively rather than exclusively. Unfortunately, we're still in a country where poor people pay more, as I mentioned, and how people pay and manage their finances is key to this. And what I've done is I've wrote a few notes about Barbara. Barbara's 78. She lives in North Wales and she lives in a nice village. She's on state pension. Things are kind of tight, but she's managing. She doesn't have a husband, Jeff, anymore. He used to do the bills. Now she looks after them herself. And her kids have moved to London, so she tries to be as sustainable on her own as much as possible. Now, Barbara doesn't use the internet, and she's getting kind of fed up with being told to go online all the time, with nobody helping her either. She's paying more for energy because she struggles to compare all the different tariffs. And she doesn't like to ask her daughter to spend time going through all the stuff online for her too. So she's on a standard variable rate tariff, paying more, a couple of hundred extra a year. She's paying more now to access her own money. This is because her local bank branch is closed, and so is the post office, and she's using a paid-for ATM. And she's also paying more for electric and gas because she no longer pays by a direct debit because she's been stung by fees in the past. It used to be so much easier when she used to be able to talk to the women in the bank and check how much of her finances were. And since coronavirus, she now pays more for her groceries. The local store won't accept her cash, so she pays for a bus fare to go to the next village, and she has to pay more in an expensive store that won't accept her cash. Those are just a few examples of where the market has been designed around a one-dimensional consumer, and might I say a consumer that probably exists in a regulator or in a financial service or in government. And I think I can say that because I used to work at the FCA. Going from experience, I think one of the biggest challenges is that Barbara is never around at the table in financial services, in the regulator or in government. And what I've found in the past is that people who make decisions on what is fair and what is right for the population are very much people like myself, middle class, gone through a certain system, and are extremely bright. Gosh, regulators, for example, they know everything about competition and economic theory and how consumers driving the market. But unfortunately, Mrs. Miggy's on the way to Iceland without a smartphone, doesn't always pass their desk. So it's around how do we bring Barbaras into the decision-making process? And when I say decision-making process, I don't mean we have a problem and I'm only going to look at that problem from the remit from my institution. It's about going to the end consumer, saying, what are you wrestling with right now? What's the problem for you? What's the solution from you? And then working backwards from that. And often that will mean that there's a mixture of social and regulatory policy that's needed. But I feel sorry for regulators because often they don't have the cover from social policymakers to make the interventions that they need. And that's what I'd like to be discussed a little bit more throughout this. Thank you.
Thank you very much, Martin. Polly, Demos has done some work and some interesting analysis of late. Can I bring you in now?
Yeah, thanks so much, Dermot. So just for context, before I was running Demos, I founded with Martin Lewis of Money Saving Effort a charity called Money and Mental Health, looking at the links between financial difficulties and mental health problems. And one of the issues we looked at with cash, but I think the crucial thing that we tried to persuade product designers, the financial technology industry and regulators of, is that point that Martin has made, that these average consumers are not very average and they're not very common. And if you take mental health, for example, 1 in 4 of us has a mental health problem, not in our lifetimes, but at any one point in time. And that's probably up a bit right now. And mental health problems, just as a, for example, change the way you are able to interact successfully with consumer services. They can have an impact on your working memory, on your self-efficacy, your ability to engage with bills and post, a whole range of different effects. And too often we think of consumers as sort of tiny subsets of vulnerable consumers, or some obscure category of people with multiple comorbidities and living in a rural area, and as if they're odd. They're actually really, really mainstream. If 1 in 4 of us has a mental health problem, then the market for people with mental health problems in financial services is half the size of the market for men in financial services, right? Like, so this is huge. You take older people, there's 11 million older people. That's, 1 in 5 of the adult population. We cannot assume that those average consumers are really any use as a model for the kind of products and services that these markets need. When it comes to cash particularly, as Dermot gave us that useful history of what cash is. It's where money first came from in terms of taking, because of course money is a fiction, right? It's a story that we tell ourselves that has useful functions in enabling us to move beyond barter. But essentially it's a fiction that exists in these, whatever particular items we like to whether it's paper or conch shells. But there's something about that fiction that we humans have either evolved or have as a natural instinct over those thousands of years we've been using them, that enables lots of groups of people to find it much easier to deal with. Now, that may be force of habit, or it may be something about the physical presence and the way we can attach ourselves to these items. There are case studies in behavioral science around how you help people to save more that suggest if you give them cash in separate envelopes, they will save more of the cash that's in the envelope marked savings. And they'll save even more if that envelope has a printed picture of their kids over the envelope, because their emotional link of breaking out that money. For me, the challenge when we think about how we deal with a potentially cashless society is, how do we find ways to recreate or even improve on the functionality that cash has developed for millions and millions of people in the UK and beyond, and try and build digital tools that aren't just frictionless, slippery, and incomprehensible for people who have potentially spent their whole lives using cash, but also find that cash helps them to budget, helps them to stay in control, and also, as Martin mentioned, helps them to share money with other people. We've seen during the coronavirus crisis, one of the challenges, people were shielding. Somebody else was going to do their shopping. How do you give money to that person who's going to do the shopping without exposing yourselves to fraud? Some of the research we did at Money and Mental Health explored the relationship between people and their carers or loved ones who are helping them to manage their money. 1 in 3 of us knows someone else's PIN number. And yet we have a financial services model in which the terms and conditions are really clear that essentially you're liable for frauds if you're sharing your PIN number. But all of us do it one way or another. And the more vulnerable you are, the higher your needs, the more likely you are to be dependent on people. And that's been particularly true during this crisis. And it's only now that we are starting. I see that Bailey Kersar is on this call, who's got a fantastic product, just as one example of something which is trying to build products that enable people to collaborate on their financial management. Because, we are human beings, we are a social creature. And in a way, I think that the fight to retain cash is in the end going to be a losing battle. The heft of this industry, the march of technology means that we will be moving away from cash. But we cannot and must not leave the group of people for whom cash is a lifeline, a habit, a joy. We cannot leave them behind. We have to try and build these new technologies so that they are more inclusive, more adapted. And as Martin says, if you build services that are well designed for those who struggle the most, you will discover that in fact you have a better product for the majority, because as I say, the majority aren't very average either.
Thank you, Polly. That was really helpful. Sean, you've got some thoughts on systems amongst other things. Do you want to expand on those?
Thanks, Dermot, and thanks both Martin and Polly for kind of getting us off to a really good start. I think in the context of this discussion, Polly's framed it really well. Money is about a means of exchange. And so that's what we should be focusing on. How do we help people exchange the money they have for the things they need? Working at Toynbee Hall in the East End of London and with communities across the UK around financial inclusion over the last 11 years, there are some things that have really stood out for me. And one of them is that digital and money, putting them together is essentially creating a double jeopardy. So when we ask people to move away from cash, which they can hold in their hand, and if they have £5 in their hand, they know that they have it. No one else has taken it from them. It's really clear they can't overspend. And also they know that when they've spent that money, they have nothing left. So we talk about it in a budgeting tool, but it's much more than that. It's about avoiding debt. It's about confidence. It's about making sure your needs are met. And so we need to really take that with us into the discussion, that the physicality of cash, the absoluteness of control of cash is something that, as Polly says, we need to be able to replicate. When we think about that double jeopardy, we need to think about how we support people. And change requires support and it requires trust. So what's the infrastructure for helping create trust around change, moving away from cash to digital tools? Well, the first thing is that you need a human being. But what we're seeing, of course, is that the branch network is being chipped away at. The access to banking standard set up in 2015 was a really nice attempt to make sure that when a bank closed and it was the last branch in town, alternatives were put in place. But actually, the access to banking standard and the review in 2016 simply said, please communicate better when you leave a branch, when you close a branch and leave a community without any access to financial services. It didn't actually solve the problem of what happens when there is no bank left in town. And of course, the government rejected the Treasury Select Committee's recommendation to support community banking hubs. And that's something that we definitely need to think about. How do we create the infrastructure to help people have the support to move forwards? Thinking about access to cash and the ATM network, there's a real problem there as well, thinking that the market will deliver. The market will not deliver. Link Scheme operates a subsidy to make sure that ATMs in the most deprived areas are free to use. However, we're seeing reports throughout COVID and before in small communities and corner shops everywhere that the main independent ATM providers are forcibly changing ATMs from free to use to pay to use. And the retailer has no control over that. That's under the terms of a commercial contract, which they never foresaw happening, and they have no power to change. So we need to make sure that when that ATM provider insists that now that ATM is going to charge £1.85, there's an understanding of the impact on the retailer, on the community, and on the purses and wallets of that community. And really, we're seeing no real support or understanding around the implications of that. And then finally, going back to that point about money as a way to exchange, back in 2010, Bax, the provider of direct debits, already knew from their research that people on low incomes don't like direct debits for two crucial reasons. Number one, they have no control over when the money is taken and whether they have enough. And secondly, if they can't pay the bill, then they either get a fee for having a returned payment, or even worse, they can't actually go on to pay anything from then on because the number of fees and fines that build up in their account outweigh their income. Now, the government did a brilliant thing by creating the basic bank account agreement, in which a new basic bank account was formed for where no fees or charges were ever allowed to be paid. That's brilliant. What we also hoped was that would force the banks into finding an alternative to direct debits for those people who need a flexible way to pay bills. They didn't do it. However, 10 years of work and Pay.UK, the payment systems provider, has now launched the request to pay messaging standard. This will solve for the majority of people the need to be able to pay bills, but in a controlled way that they can flex their outgoings against their incomings. And of course, we're seeing more and more people on zero-hour contracts, on the gig economy, being furloughed, on fluctuating incomes. Having flexible ways to pay is really important. And it's one of the key things that will help people move away from cash. However, the banks are not introducing it because they think it's too expensive and we need to make sure that they understand that the cost saving for the economy is significant. So what's the role of government in all this? It's about really understanding when it has a role to say, this has to be on your budget book this year. You must make these things happen. We can't leave this issue to the market. And sadly, there are too many areas where the solutions are being left in the hands of the market when we absolutely have the case that this is a social good that needs to be enacted. Now, we have fantastic ministers for financial inclusion, and I know that their hearts are kind of deeply attached to these issues and that they have conundrums to solve as well. So that isn't an attack on the government. It's a government of any kind needs to make these tough decisions. I would say that the evidence clearly shows we need more government leadership and more regulatory frameworks that will make sure that those needs that Martin and Polly articulated so beautifully are met.
Thank you, Sian. Guy, I think this has been quite a hot topic over the last couple of days in Parliament, with a significant debate going on today, I see. Perhaps you could share some of your thoughts.
Sure. So first of all, my thanks for the invitation. Honoured and privileged to be with Big Tent once again. I have attended every single Big Tent event in the past, and greatly look forward to when we are back to normal and we can do events in the tent properly. I think I'll start with this simple question. My glass of water, is it half full or half empty? And I speak as a constituency MP who has the second largest constituency in the country, with some of the biggest issues in terms of access to banking facilities. And I also speak as a government minister, and I think I'm going to respond to a few of the points made. I'll refrain from casting aspersions to the FCA and Martin's comments on that, but I would make a couple of basic points. It is quite clear that many people in society are moving away from physical banking and going online. And to some extent, I'm an architect of that. I'm working on things like the pensions dashboard, which will create your pension online in the pension schemes bill that George and I will be debating again on Monday in the House of Commons. And at the same stage, though, with savings apps and banking apps, we now engage with our bank manager way, way more than we ever used to do. I'm old enough and grey enough to actually remember meeting a person called my bank manager. Of course, we don't do that anymore. We now engage in a different way. But my glass is still actually half full, because I start with, what have I done locally to try and address the problems that everybody has raised? And then I'll move to what the government is doing. The first is, when I got my job in 2010, I realized that the banks were disappearing, that my football team was sponsored by Wonga. We had an issue with payday lenders. So we set up, at great difficulty, a community bank. It's the fastest growing bank in the north. It's called Northumberland Community Bank. It provides access to savings and loans on an ongoing basis in a space where the banks are withdrawing. I also, for my sins, I was the chairman of that. I'm not anymore. For my sins, I also set up a mainstream bank called Atom, which is an online bank, which is again based in the Northeast, and is competing with the big boys and trying to provide access to finance. I think you have to run that, as Sian was talking about, in line with the basic bank accounts. I mean, bear in mind, 7.5 million people now have a basic bank account, something that was set up fairly recently. The access to that is fantastic, and there are fewer people unbanked as compared to 5 years ago than by any stretch of the imagination. What I'd like to try and address, and I think that everyone has made very valid and fair points and said government must do stuff. Clearly, I'm not the Treasury, but I speak for government in a broad terms. But I think there are two things. If you aren't all submitting your evidence to the consultation that is ongoing for the access to cash call for evidence, then you're missing a trick, because everything we're talking about should be going into that. So if you go to gov.uk and then you go /government/publication/access to cash call for evidence, then quite clearly you will be doing that. It closes on the 25th of November. It opened 2 weeks ago. It's clearly very, very important. At the same, so my first point is government is doing something. It is specifically looking at this problem. The second would be in relation to the community access to cash pilots. If you aren't looking at that, I suggest you should be doing so. There are 8 communities up and down the country, whether they are from Falkirk, from just near Falkirk to North Yorkshire, to Hay-on-Wye, to Cambuslang in Lancashire, to Rochford in Essex. There are 8 communities who are supported for the access to cash pilot trials that are going on. And I think they are good examples of how you do things better. You should also then be looking at what individual banking organizations are trying to do and whether we should be building upon those. Self-evidently, they range from the community bankers that some people have got going out and about, the mobile banking vans that I think it's NatWest and Lloyds are both doing, the post office vans that operate, and I have a van that drives around my rural community in West Northumberland on an ongoing basis, and obviously some are doing tech support. You then look at, if you haven't looked at the example in Hawes in North Yorkshire, in Rishi Sunak's constituency of the Newcastle Building Society going in and providing a banking hub, I think you should look at that. So my point is, my glass is half full because there is an awful lot of work being done in this space. I run with my good friend John Glenn, the Financial Inclusion Forum, on which Sean sits and many others contribute. And I could see the work that is being done to try and make a difference in that space. I wanted to try and touch upon a couple of final things, which is clearly we're now communicating via Zoom, as we all do now. Sometimes we forget to mute, sometimes our internet isn't greatest. We all have our difficulties and disasters there. That has transformed, however, the accessibility of online capability amongst the elderly and the those who previously would have struggled. And whilst there is many downsides to COVID, what is patently clear is that one of the pluses has seen the way in which there is an increase in technical capability amongst many. And I'm certain that all of us will know grandparents and family members who would previously never have done a Zoom call, who will now be doing that in a way that I believe will give them enough opportunity to get a digital capability that wasn't there before. There is so much more I could say, but I mean, I just keep going back. Look at the consultation that Judge Treasury are doing. Look at the access to cash pilots. Look at the individual examples of the Newcastle Building Society at Hawes or others that are trying to do good stuff. But my view is that my glass is actually half full. There is great things that I know that George is doing in Norfolk, I'm doing in Northumberland to try and make a difference locally, but also some pretty good stuff that's going on nationally.
Brilliant. Guy, thank you for that. So we've got some a few pre-submitted questions and some questions popping up in the chat. For your information, I just dropped the link for the access to cash consultation into the chat here, as it happened to be something which I read earlier today. First question from Nina Mahanti. I'm actually doing them in reverse order here. The UK is famous for its fintech ecosystem, and yet I'd argue very few fintech companies are working to serve the underserved. If one were to try and build something in the private sector, what support is the public sector ready to provide, whether it be from practical advice, partnerships, funding, grants, etc.? And that feels like a question for you, Guy.
Well, I think you need to be looking at the Treasury Sandbox, which are looking at these exact points. For those who don't know, Sandbox is an opportunity to pilot individual projects in terms of innovative solutions to present technical problems. Treasury and others do particular examples of that. I'd also look at what individual companies are doing. Clearly, as a government minister, I would never espouse or endorse any particular companies, but there are a couple who are working in the savings and online banking space who are truly transformational. Moneybox is a good example. There's Plum is doing fantastic work as well. There are really good online examples which could quite clearly be linked into other ways of doing things. I've seen what they're doing in terms of pensions and what they're doing in other financial services. There is great capability out there.
Great, interesting. So I've got a couple of questions. I'm going to ask them in blocks of three. That one I put on its own. But so the first question from Tom McCallan, who asked me to ask it. I often find that the change can be accelerated by opening ourselves up to learnings from other countries and cultures. For example, BIT are doing amazing work in the digital currency and the banking, the underbanked and the Caribbean. This panel and discussion is worded as a UK-centric. What learnings are the panelists currently using and seeking from more from outside the UK that can help their work in the UK? So the second question from Emma Stone, Director of Design and Research in the Good Things Foundation. How can we bring digital financial inclusion support closer together, building on the Toynbee Hall's digital memory mentors, Clean Slate's work with MasterCard, We Are Digital with Lloyds? We're still a long way from where we need to be nationally, but the need is really growing. And Adam French from Cambridge Commons, according to research, goodthingsfoundation.org, around 9 million people have limited digital access. Half of this number are over 65 and may have issues with limiting digital access. What issues does this raise for development in the social end-of-life care? And what are the remedies to education? And what alternative remedies to education are there? Who would like to pick up that? One of those. Sian, I can see you smiling and nodding.
Yeah, I'll happily come in on some of those. So I began my financial inclusion obsession in looking at microfinance in the international world, particularly in China. So I love the question around international learning. Some of the things that are really helpful to us at the moment are the community bank model in Australia. So there are some really good models around community banking hubs, which are not just about financial services, but they're also about access to debt advice and to other services that a community really need in order to make their finances work well. And there are organisations here in the UK who are trying to replicate that. I think that's really important. Another particular piece of learning that we're trying to bring across from Australia is around the no interest loan scheme. The idea that there are people for whom having access to fee-free, interest-free loans will help them be able to really transform their financial situation or their economically active situation. And so we're working on a pilot around that. And the third big piece that I'm looking at the moment is around access to cash and digital ID. And there's learning from many of the European countries around access to cash, and then really importantly, India and Estonia around digital ID. So I think there are many, many examples that we can draw from. If you're interested in that, the other organisation I'd point you in the direction of, which I've recently joined, is the Financial Inclusion Forum, which runs online events and pre-COVID physical events around sharing international learning. So I would definitely encourage you to look there. And then on bringing together the digital and the physical, we've worked with the Good Things Foundation, so I love this question too. One piece of research that we did many years ago was around access to digital and the needs of emerging payments for people living with disability and people who are over 80. And one quote sticks in my mind from all those years ago, and it was around a gentleman who talked about learning to use the Sky box on his television. And he talked about saying that if only the bank branch staff member had the same patience with him when they were trying to show him how to use the ATM machine as his grandson had with him trying to show him how to use the Sky remote control, he would be able to use the ATM machine in the same way that he can now use the Sky box. And for me, that's what I was trying to say earlier about, it's not that any of us want to stop people shifting to digital, it's that it takes time. And the infrastructure around support and helping people learn is really important. My mum was diagnosed with motor neuron disease 4.5 years ago and sadly died 6 months later. And one of the most powerful things that happened was not that someone gave her an iPad, which was pointless. It was that one of us sat down and spent 4 hours showing her how to use it. And so the education piece has to be seen in the round. And it's not about people not having the ability, it's about helping them through the process of gaining the ability, and that takes time. So I think that's really important. And the digital access is crucial. We are the outstanding people in this, with the exceptions here on Zoom. There are many, many people in this country who have no idea how to use Zoom. And the reason they don't know is because they've never used it. And until someone sits down and takes them step by step through how to use it, they'll never use it. So it's not that people can't learn, it's that they need physical access, they need decent Wi-Fi, and that's a massive issue in this country, which we all know and is being worked on, but needs more investment. And finally, it's about understanding that you've got to hold people's hand through this process in order for them to use all those brilliant things that Guy talked about so well.
Yeah. Polly, do you want to come in on some of this, and then I'll bring Martin in as well.
Just relatively briefly, I mean, clearly a major part of the answer would be putting Sian and Helen from the Good Things Foundation in charge of a lot of this, because they're understanding the piloting, the evidence building that those organizations have done in order to work out practically how do you support people through these through these transitions. They're big, and it takes time. And I can't make my stupid remote control half the time, and I'm essentially a remote control native. It does take time, and it is expensive, and we have to recognize that. I think so often we see how much money you can save as an organization or as the state when you transition to digital self-service for a whole range of different things, not just far beyond financial services. And we forget, you see, it's a tenth of the cost. It would be half the cost if you recycled the money you need to recycle into those patient, expensive, slow inclusion processes. And we need to recognize that's brilliant. You've still halved the cost of your service. And instead we go, I don't want to spend all that money on all of that expensive stuff, because we just got our eyes captured by this exciting thing of, it'll be really cheap because I've moved the entire benefit system online. That's actually, it's madness to do that. It's completely stupid. In terms of the international learnings, so a former colleague of mine had worked at Demos, but before that had worked, she's Dutch, in the Netherlands as a benefits advisor. And what she recounted was that when somebody moves on to benefits, makes a new claim, the advisor helps them, sits down, helps them to establish a budget, helps them to establish bank accounts, direct debits, making sure that money is going into the right pots so that they can manage on what is, in almost all circumstances, a substantial change to their income and outgoings. And what we do is we say, hey, would you like to wait 6 weeks for any money? And these are worlds apart in terms of an approach. Some sort of catastrophic life event has occurred to somebody, and instead of offering help, we ask them to wait. We need to offer a shift in the money that we offer. And I know that is changing in some ways in universal credit, but also we need to think about what government would call the DEL costs, the people, the resources, whether it's charities or job centre advisors. The people intensive resources are an absolutely fundamental part of this transition, and face-to-face services, which may have to adapt dramatically, are essential to being able to crystallize any of those magical, much wished for savings from the digital transition.
Jolly good. Martin, your thoughts? You're on mute.
There I go again. It's very difficult to follow Polly and Sean, I have to say. I'm just taking a bit of a step back and thinking the questions are very wide. I've been working in financial inclusion for a similar amount of time as Sean, I imagine, which is quite a while. And I think what we need to do is agree what is our vision for inclusion. What is our agree for our vision for financial inclusion? Yes, there are things happening that are a piecemeal approach to fixing problems once they've happened. What if we put people at the heart of inclusion right at the beginning? And what does that mean tangibly? So we've been working over the last year at Fair by Design on creating a publication with Money Advice Trust on what is inclusive design within essential services. And also practical tools around bringing people into policies and process, putting people with lived experience of poverty who aren't usually heard, so that as new markets are created, products are developed, and then firms are indicated that they have to be inclusive themselves, that is done at the beginning of a process rather than trying to fix things later on. But the big ask I would have, though, is we will launch a whole guide on inclusive design for Ofgem, for the FCA, and I know they'll come back to me and say, oh, but this kind of work goes onto social policy. We need an agreed vision where social policy and regulatory policy works together, or social policy makers give regulators a duty on financial inclusion so that they start with people at the get-go who are the 20% rather than the 80%.
Interesting. So just bringing in picking up on some questions from the audience. Melanie Griffiths, are you there? Hello, Melanie.
Yes, I am.
Hi, Melanie. You asked a question about systemic risks. Do you want to ask it? It sounds like it might be one for Guy. Do you want to ask it?
Sure. So fundamentally, when you hold cash, the government is the ultimate backer. It's a relationship between citizen and state. But when you go cashless, the relationship becomes a relationship between corporates and consumers, and that creates systemic risks. So if Visa or a bank is subject to an attack or for whatever reason is not functioning, the government can't just step in. How are you thinking about systemic risk? I mean, it's even a security risk. If you want to bring the country down to its knees, you literally just send a virus somewhere and then no one has access to any payment methods.
Guy, that feels like a question for you. Maybe it's unfair.
Let me see if I can address. I'll try and address that, and I'll also try and address the 3 points made by Tom, Emma, and Adrian. So Melanie has raised, well, what is the situation if the entire country is brought to its knees by some giant computer hack? It is entirely correct to say that every single movie has envisaged that in some shape or form. Clearly, there is huge amounts of work GCHQ and others are doing to try and address that. I would slightly push back the point in terms of the security of your finances, given that when I set up a bank, I still had to get the PRA assurances such that any deposit with said bank, even a tiny community bank that I set up, with others obviously, that has up to 85,000 security. So the government backs your financial situation in those circumstances. There is a huge amount of work being done to prevent us being hacked in such the way described. But clearly that is a problem with a computer-based society on any basis in this country or any country. Can I just try and address, the one I was particularly interested in was Tom's question about international examples. So I lived and worked in Africa. I ran a farm and I taught in Africa for a long period of time in Tanzania. And the experiences I saw some considerable time ago, but also have seen more recently in terms of access to banking in digital ways amongst a community who you would say would be really struggling with a digital only banking, taught me that it is possible to address these particular things. And I then look locally and we talk about the difficulties with change. I totally accept there are significant issues of change in terms of access to digital capability, as Emma was pointing out, and access to digital capability in a longer term social care end of life situation, as Adrian is pointing out. The bit I would say is that so I have seen the change that took place when 11 post offices were closed under the Labour government shortly before we got into power in 2009. And then we had to then go to a mobile post office throughout the rural parts of the community. Very difficult to start with, but it now goes off absolutely seamlessly. Everybody knows that at 11:30 outside Humshalf Village Hall, the post office van will be there for 30 minutes every day. And at 12 o'clock, it'll be the next village, and 12:30, the next village. And that works really, really well. And it takes a while to get used to this significant change, but with the right amount of assistance and guidance, it can be done. Similar in relation to digital, it is difficult, and there are examples. And I think that the Treasury Review clearly is the key document going forward because they're going to set the rules. But you look at some of the examples that are already being successful, whether it is the community bankers who are going into individual libraries, who are going into village halls, who are going into council offices and working in an integrated way. It seems to me that is ultimately the way forward. I look at what we're doing in DWP, where you have integrated hubs for universal credit, but also you have the local authority there in terms of housing in the same building. You also have citizens' advice in the same building. So people are literally passed from individual person on the same floor with the capability of solving not just one problem, but a multitude of problems. So it seems to me greater use of integrated hubs, greater use of other organizations working collectively and empowering local communities to solve local issues. My final point would be this. digital ID is clearly the holy grail going forward. And I would love all the great and the good on this call to be looking to how they would fix that as well, and putting their collective heft as to how it is you do that going forward. Because I genuinely believe that there is great capability if we all apply our minds to digital ID on an ongoing basis, because there then is the capability that you can see on an ongoing basis of assistance and individual solutions to some of the problems that we're looking at.
Very interesting. Right. Okay, well, we're slightly coming to the last few minutes of this evening. Guy, thank you very much for that contribution. If I could ask the speakers just to give probably a 1 minute summing up of their thoughts, and then we'll probably move to the informal section of the session. So perhaps in no particular order, perhaps since I came to you last in the questions, Martin, maybe I'll come to you first in the summing up.
And I'm a reflector. I'm just thinking, I guess I'm leaving with a question, and my question is, who is responsible for financial inclusion in the UK today? I'm still finding it hard to understand who leads this agenda and who has responsibility for it. And I'm looking for a world where we have a clear institution that people like myself can converse with and work strategically with.
Cool. And let's go to Sean.
Thank you. So my reflection, I guess, is that in many ways we're agreeing with each other. We're saying that digital transformation for the individual as well as society is possible, but that it's hard work and it takes investment, commitment, support and collaboration. The one piece that I think we haven't quite really kind of got there yet is who's the lead, and that goes to Martin's question. So we tend to think that it's the market that is leading, but actually it should be the state, and the state not as a dictator, but a state as a reflector of the people who are residents and voters in the country. So I would like to see more leadership in the form of pointing people in the right direction from the government, because they know the answers, the research is there, and they have the commitment to make the right changes. It's just about using the infrastructure well.
Interesting and valuable thoughts there. So Polly, your closing thoughts.
During coronavirus, we've taken, in some sectors, 10 years of digital adoption happened in, 10 weeks. And we cannot change the fact that this is our future. But we know the political consequences of leaving people and places behind through periods of substantial change. It's not fair, it's not right. And what's clear from certainly all the work we've been doing at Demos is that people want digital inclusion to be addressed. They have seen this huge shift in adoption, and they don't want an unjust society where people and places are left behind. And this question of digital and financial inclusion, which are so deeply linked, though they require slightly different but coordinated strategies, has to be part of an agenda to level up. It's just got to be part of it, or it won't work. And so for a government that has put levelling up at its core, I think there's an enormous opportunity to bring people and places into a different kind of economy, which could potentially be better and with better outcomes for them.
Cool. And I guess that leaves Guy to the opportunity to have the last say.
So I think I welcome the discussion. I mainly signed up to this partly because I love Big Tent, but I also I kind of want the debate, and I want more people contributing to it. So the old adage we had under Labour was, and I spoke as someone who worked for the, my last client was Ed Balls. I worked for the Labour government, and I was in a position that I represented them on a repeat basis. So. But the old adage was, we're often consulted, but we're always ignored. And I think it's to the credit of Treasury, and it is Treasury who fundamentally lead on this as a government organisation, who have even during COVID, have both launched the consultation as to the access to cash, but also done the pilot projects and also are trying their hardest to drive forward real change. And I think one of the key points they make, to answer Martin's point very clearly, is that there are a number of different regulators and organisations, from the Bank of England, the FCA, the Payment Systems Regulator, and Treasury, each of whom have a role. And some other organisations, whether it is Linked or DWP or other organisations, who have a significant influence on this. But trying to work out how you integrate that in a better way forward is one of the specific questions raised in the consultation. So it seems to me this is a very apposite discussion, because we're trying to form and shape better public policy on a long-term basis. And I think that, if nothing else, is something well worth aspiring to.
Fantastic. That just really leads me to say to everybody, thank you so much for coming this evening. To all our speakers, thank you very much for giving up your evening and for your contribution here. And we're now going to move on to a much more informal part of the evening, where you're all most welcome to stay here and join the conversation.